All right, all right, all right. It's about a minute to the closing, so nothing much more is going to happen. Look at this, man. Just one strong bar after another, and I would equate that or um, blame that on the lower than expected jobless claim. There it is. Everybody's feeling good about understanding what the tapering policy is and what the interest rate policy is, and that gives some clarity to the market. And folks start investing again when you have clarity in the market. As we said yesterday, we're getting this reversion on the daily, and the daily is pushing up quite nicely. So, hey, we're going to let it go. We're not going to chase it. We're not going to fight it. We're going to let it do what it's got to do. I mean, that's a lot of 1, 2, 3, 4, 5, 6 strong up days, way overextended on my other charts. So, I would like to see a retrace almost 100 points to 45.98. That would feel pretty healthy to me and somewhat expected. Um, so we'll see. Maybe we get a little pullback tomorrow, but no more fear from Dave. I'm not hiding from the market. I've got to get into my income trades, and I'll just have to defend it if I get caught up in that retrace. Just a quick look at the 60-minute, and the 60-minute putting in looks like it could be a double top. You got you got it tapering off over here on the momentum. So it could mean a little bit of a sell-off into the morning, tomorrow morning. Taking a quick look at the 10-year. Oh, that was nice and quick. Maybe we can get through this with no trouble. Looking at the 10-year on the daily, the 10-year's pushing down, broke my bullish line, came back and gave me a retest, and it's just grinding down. So I figure it's going to come down and meet this cloud. We should be looking for like 1493 or so. Ultimately, we know that interest rates are going to rise. So you can keep your eye on that. But this is helping the market somewhat. This is actually a head and shoulders pattern. So breaking this, it'll probably come down the difference of this run, 15. So it'll probably come down a point breaking that. So we might see 1524. It might come down and test this area over here, just based on this head and shoulders pattern right there. So keep an eye on that. And if you want to play um, the interest rate, you can play the TBT, which is the short of the bond. So interest rate goes down, bonds go up. If you want to play the long, you play TLT. Actually, let's throw that bad boy up here. TLT. So if interest rates are coming down, then bonds are going up. And TLT for the long, TBT for the short. So I'm looking at Exxon Mobil. Let's see if we can get some data on it. Data. Oh, I guess TLT was the bluff. Everything looked good. Such a problem, such a problem, such a problem. All right, let's see what we can do here. Make this happen. Oh, there it is, just as we were ready to give out. Oh, and there she glows. Okay. Hey, life off grid, baby. So we're looking at XOM. It's just has daily divergence going on over there. Looks like energy is going to start coming down a little bit. So if you want to get involved with it, maybe you look for it around $61 a share. Wow, there's a crazy gap right down here. I mean, I'd be surprised if we saw it at 58 again. But this, I just keep buying this on dips because it pays 6% dividend. The lower you buy it, the higher the dividend yield. But that's why I buy it. It's Exxon Mobil. It usually trades for me between 55 and 70. And, I just keep accumulating it on dips and collecting my dividend. I mean, ultimately, I'm a lot lower than that because I've been doing that for a few years. But just a good company. I like to get involved with it. I'm going to continue to do that every time I've got some long-term cash and I see a dip on it. I also like Verizon for the same reason. It's pulling down a 4% dividend, 4.85, I believe, in this area. It might even be up to 5 at this point. Technically, I can't really show you because it's taking its time with the data. Oh, here we go. No. So this looks like a trend reversal, and it's ground its way down right here. Took an aggressive grind down. There's a hammer, and boom, it took off. This is, you could call this a trend reversal. A good entry, if you were trading it, would be a break of 53.40, or really, you hold out at 53.98. And if it breaks that, it's probably going to start grinding its way up to the highs. But this is the type of stock that, again, I buy on dips. I try to get it as low as possible. I don't have that falling knife theory with it because it's Verizon. They're not going anywhere. It's a long-term hold. I'm not trading it. I do get capital appreciation because I hold it over the long term, but ultimately, I'm looking for that dividend yield, and this bad boy is giving me 5%. Viacom, I think Viacom's paying like 2 or 3%. I really can't recall, but this stock, which is beating the crap out of me, I'm actually chipping away at and looking for a $64 number. It's actually really undervalued. These guys are all right. They make some money. They're doing good business. Okay, it took a hammer in today, but again, you see a divergence. Here's the lows on the daily, and this is a higher low. I mean, it's got to turn around a little bit to complete it, but you can see it pushed down to the same low, but the momentum is fading off. If we have an up day, we'll get that one red finger right there. It'll be giving me a bull finger, and that's usually a good indication that that sucker's going to turn around and start making its move up. And what else? I like Disney. Chip away at it. I'm not really sure what the dividend is, if there is any even, but we've been picking away at it at low prices, me and my free folk. And I mean, I think that they've seen a 20-point move or 10-point move, depending on where they got involved. But again, it's testing its lows right here, putting in some bottoming tails, and it's Disney. You know, I think they make out no matter what happens with the pandemic, because they have streaming and they have shopping online. And if everybody decides they want to go out, well, they got cruise lines and amusement parks. So a good long-term buy. Bank of America, I think it's down today. So you ask me, this is a good buy. As a matter of fact, I didn't even realize that. I would have put some away today. But tomorrow's another day. We can do that. They are going to definitely reap the benefits of interest rate hikes. And you have to figure the Fed's got to try to bring the interest rates to some sense of normality so that they have ammo in the war chest in the event of a recession. And they could help combat that by dropping interest rates, freeing up some money, and getting business rocking and rolling. So just looking at the chart, it looks like it put it in a little double top. Momentum is fading down, but I'm not too worried about it. I think you can do well on it. You can even see it bounced off the lows of the day, which is really institutions sucking it away. So keep your eye on that. Maybe you want to get involved with that. You know what? For the free folk, let's take a look at AMC and what that sucker's doing. Actually, I saw a very interesting chart today. But it looks like it's fading right into a consolidation. Let's see if it will give me something. We'll just have to wait on the chart. Hopefully, I don't get bored because I think everybody knows I'm a wee bit ADD. Okay, here comes the boredom. All right, well, it looks like it's not going to do it for us. So there you go. This is Deep Sea Dave and off-grid trading. Actually, we should change it to offshore trading. Actually, I intend on getting into safe harbor this evening, although we may not be able to do it because things are pretty snotty out here. and might be too dangerous to go into safe harbor. So we'll probably bounce around out on the water overnight, and hopefully things taper off a little bit and I can get into the channel. Anyway, just remember, when you're trading, you got to be calm and cool. I recommend a little meditation before the market open to be at peace, and good luck.